right. Thank you, Dream Team. Nice assessment of this morning and what's going on during the dog days of summer. And Pavel Hala, welcome back to F.A.C.E. How are you, my friend?
Hello, Dale. Do you hear me?
I can hear you loud and clear.
Great.
Do you want to go to screen share? And while you're doing that, I'd like to take the time to acknowledge what a great call you made on copper last time you were on. So, we're up near the highs and you're talking about a pretty big hit and it manifested for you. In fact, every time you've been on, you've been accurate. So you may want to retire now.
Yeah, maybe the right time.
Batting
Pull it off.
100%. So, when you establish that type of credibility, I know your subscribers are paying attention. So, what do you have there for a watch list? Is that what you want to cover here?
Yeah, today I want to take a look at gold because I'm beginning to like gold.
That's good news to me.
Yeah, the idea is, the problem with gold or gold analysts in general is the very low signal to noise ratio. Basically, there is a lot of gold bugs that are always bullish, they are never bearish. So when you read on Twitter or elsewhere about gold, it's very hard to, take it seriously because everybody is bullish most of the time. But I think, as you said, I've been bearish metals, including silver and gold, just this spring. So I'm definitely not a permabull. I do not like precious metals personally as an asset, but I like them as trading vehicles. But the point is, it's pretty simple from my point of view. The real rates, for example, by looking at the 10-year real yields in the US are oscillating somewhere between 0.5, 0.8. And the question is the
10-year rates are you talking about?
Yeah, I mean the real yields.
Okay.
Not the nominals, but the reals between 0.5, 0.8. And as I said, the question is, are the US consumers, or not just US, but worldwide consumers and companies able to withstand such yields? And I think the answer is no. Because when you take a look back into history, when you take a look at the situation between 2015 and 2016, the real yields peaked, if I'm correct, somewhere around 0.8. In November 2018, they peaked above 1%. And right now we are, as I said, 0.5, 0.8. The yields can go higher in the short term, of course. But given the historical data, I think it's very likely the reals will turn lower eventually. And once it happens, gold will benefit tremendously. So that's the basic idea behind.
How about the dollar, Pavel? It's always been my contention to have a real bull market in metals. You need a bear market in the dollar.
That's true. That's true. The problem with currency trends is that they tend to be very persistent. And that was the case also with the dollar this time. That's why I'm so careful about forecasting the dollar.
Are you tempted to be, does it feel like we're, within 5% of a high? And at the same time, you probably wouldn't feel comfortable getting long dollars here, would you?
No, definitely not. It's over for the dollar.
That partly answers a question for me. You may not want to reverse, but if you don't want to be long, obviously the move is kind of mature, right?
Yeah. To be completely honest, we've been incredibly bullish dollar at the beginning of 2021, last year.
Yeah.
I did not expect the uptrend to run, so high. As I said, it's very hard to predict these currency trends. But that's the reason why I do not try to short the dollar. I think it's better to wait for some confirmation or
You'd rather buy Palladium.
Yeah, definitely. I like Palladium much better because of the price action. The Palladium is the only metal that create a higher low, while gold, silver, even copper, they are, moving lower, including platinum. Palladium is the only metal that failed to make a lower low. So that's one of the reasons I like Palladium right now. But I'm going to go back to gold and take a look some charts. I won't go through everything because you have talked about gold and precious metals in your stream moments ago. But I will take a look at some data you haven't mentioned. For example, much more interesting than gold in dollars is the gold priced in euros. The chart is much more readable. And if you take a look at the chart, you can see the gold in euros broke below this rather important trend line. It's in a clear downtrend. And it suggests there might be some more downside in the short term. That's the reason why I said that I like gold, but not necessarily immediately. I like it in the medium term and long term. And this is the reason. There is a strong support around 1,650 euros. So it would be great if the price gets somewhere here. And if that happens, then I think it's very likely that gold in US dollars will undercut the previous lows around $1,680, 80, 70.
People will be calling that a breakdown.
Yes, exactly. That would be great because it would wash out many of the bulls and reset the sentiment, which frankly we haven't witnessed just yet. But it's true to say that the sentiment is bearish. It's obvious when you take a look at the commitments of traders' data, especially the large speculators. We are approaching the zero level, which is something we last saw in April 2019. And obviously, it was incredibly bullish back then.
Yes, yeah.
So I will be watching this carefully. On the other hand, it would not be exactly great if the net positions go below zero and stay below zero for a long time, because that would mean the bull market in gold might take a longer pause. For example, during the bull market from 2002 till 2013, the net positions have never dropped below zero. So that's interesting, and that's the reason why I do not like them to hover below zero for a long time.
The gold. Do you follow the gold-silver ratio, Pavel?
Definitely. I have a chart of the gold-silver ratio somewhere around here.
Is it possible that this rally and the gold-silver ratio could be, long in the tooth as well? And if that's going to end up turning, we've had a couple. Maybe there's one more shot up. Would you prefer being long silver over gold? Because, if you look at where it's at, it's almost halfway back from the highs at 120 before we went to 60. That was a top. Yeah, see?
Yes, exactly.
Yeah, so to me, looks like a bear market rally so far in the gold-silver ratio.
Yes, I really like the gold-silver ratio because unlike the price of gold or silver or basically anything, it's trending over time due to the non-zero inflation and so on. But gold-silver ratio is a basically mean reverting ratio, so it's great for analysis of gold and silver. I wouldn't be so sure to call the bottom on gold with the turnaround in the gold-silver ratio. It's likely. It might happen, but if we...
Maybe the bottom in silver, but not the bottom in gold, if it peaks. Is that what you're trying to say?
No, I'm trying to say the vice versa, because if you take a look, for example, at gold and silver in the recession around 2000, you'll see that it was gold that bottomed first. Here we are.
And then silver.
And then silver. It's
right.
I will zoom it even more. And here we go. Gold bottomed first, and then started to, go higher, while the silver continued to move lower. Yeah, the downside was pretty limited. So the risk reward was great from the long-term perspective, and silver eventually outperformed gold. So I do like silver from the long-term perspective, but it can happen that we can repeat such a scenario.
Right.
I would not be speculating about this, but it is something to keep in mind, and that's the reason why I think gold is a safer play in such a situation like right now.
Very understandable. Okay. Was there anything else you wanted to talk about in the gold market? Any other indicators?
Yeah, I will show you a few pieces of data you haven't mentioned. Maybe also interesting piece of data is not just the net positions, but the net traders. Which is basically the difference between or the number of traders who are predominantly long and short, or net long or net short. And we're finally, when I take a look at the large speculators, we are finally approaching the levels associated with intermediate lows. And the hedgers, or in case of hedgers, it's even more interesting because
they're not short anymore.
They are not short anymore, which means that there are more people who are net long. I mean, hedgers, hedgers who are net long gold compared to hedgers who are net short. And over the past 5 years, it was a great indicator for timing the intermediate term bottom. So this is notable. And I will also show you these last 3 charts. The first one is the price of silver compared to commitments of traders data on the Aussie dollar. It's my preferred way of evaluating the overbought, oversold conditions on the silver market. It's not so straightforward, but I think it makes sense if you delve deeper. There is a inherent association between the Aussie dollar and the silver price, and this is just a manifestation of this relationship. So you can see that we are definitely approaching the levels where it will be interesting, but still there's a long way to go towards the inversion in the net position. So that's the reason why I would be careful about silver. In the long term, definitely silver will outperform, but in the short term, it might be difficult. And I also have 2 other charts. The first one is the chart showing the copper spreads, which is something I went through last time when I was bearish copper, silver, and metals in general, because there was a clear bearish divergence. I mean, the copper price, which is the purple curve, was rising, while the while the bull spreads were going lower. Bull spreads across the curve, as you can see here, I have different bull spreads here. So that was a great short signal. But right now we have the opposite situation, because the copper price is falling off the cliff, while the spreads are refusing to break lower. So this is interesting. And something similar is happening in the platinum spreads. As you can see here, there's a clear divergence between the underlying and the spreads. So that's the reason that adds to the bullish thesis for the metals in the intermediate term. But once again, it's important to keep in mind that there might be some more downside in the short term. It would be understandable because of the situation on the gold price in euros. Another reason is the silver price, because if you take a look at the silver price distribution over the past 5 years, you will see that we are somewhere in price vacuum. And if the price continues lower, there's a cluster of prices around $16.5. So we might visit this cluster and retest the area around 16.5. And copper is slightly above $3, so retesting $3 or going below $3, that would be great for the sentiment. So I'm not gonna speculate about the short-term direction. I think the uncertainty is too high, but it's something to keep in mind that there is a possibility of more downside in the short term.
And that will be the break to buy.
Exactly.
Okay, so Pavel, best way for people to see your work, keep in touch with you, would it be following you on Twitter, or you could show your website? And you do an excellent job with English as your second language.
Yes,
good communicator, buddy. I know most people are nervous about it. I could barely speak English, and I'm an American. So anyway, here's Pavel's website. And I believe you have a free market letter for people to test the waters with, right?
Yeah, we're developing software, analytics software for commodity markets. We have signals that alert us about interesting opportunities in the markets, and the platform is also available for free. So you can sign up. There you will have access to all the market data and the majority of charts, or you can use the premium version with the signals research and so on. But I really recommend you to try the free version first, and you can access most of the data and charts I presented today, and check it for yourself and evaluate the markets. So
thank you, Pavel Hala, my trading warrior brother, at spreadcharts.com on Twitter. Really appreciate you sharing your ideas with our community and edifying them. Glad to have you in our rotation, and grateful to Twitter that our paths crossed.
Yeah, thank you, Dale. Thank you for inviting me.
And I'll get back, I'll get a hold of you later, buddy, and we'll set you up for the fall.
Looking forward to it.
Okay, everyone. So check out Pavel, and people are thanking you, Pavel. So enjoy it. And someone wanted a platinum look, but platinum is probably the next one to turn up. Do you agree with me, Pavel?
Yeah,
Palladium and platinum.
Yeah, because of the strength in Palladium, it might be true that platinum will be the next, because these two metals are connected. The platinum is not so much influenced by the situation in Ukraine, but I think that
are there any stocks, miners that are palladium mines?
I
think they're all in Russia, aren't they?
Yes, there is SWSB or SBSW. I'm not sure right now, but
send it to me when you find out. Okay, it's probably pretty illiquid, but
yes, the problem is there is probably not a pure palladium miner, because, like I said, it's called platinum group metals because these metals are usually found together. So yeah.
Well, a platinum palladium combination would be okay, and I have confluence from a couple of analysts I respect that are saying what you're saying, and then you come in and show that you're long palladium on that action. So to me, that's confirmation. That's my conviction. So I appreciate it. You helped me too, Pavel.
Yeah, thank you, Dale.
All right, buddy. So good hunting the rest of the summer, Pavel, and team. And attendees who could join the team in 25 minutes. You're welcome, Anthony. You're welcome, Sinatra. People thanking us, Pavel. Yeah, and remember, more than copper or platinum or soybeans, don't just count your bushels or your stacking your coins, count your blessings. And I'll see everyone tomorrow for Turnaround Tuesday. You're welcome, Jatin. So thanks again, Pavel.
Yeah, thank you. Have a nice day.
I'll be in touch with you later today. Thank you, bro.
Great. Bye.
Bye-bye. See you guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.